Hi, self-employed pros. If you are a consultant, creator, or contractor, or independent professional and you file on Schedule C, this video is for you. We have just a few weeks left in 2025 to make key moves that determine how much of your hard-earned income you keep and how much go to taxes. In this session, we will walk you through three major parts, each with some example, step-by-step implementation, and bonus pro tip to maximize results. Here is the roadmap. Part 1, maximizing deductions. So locking things in by December 31st. Part 2, retirement and HSA moves you must act on. Part 3, estimated taxes and cash flow safety nets. Then we will cap everything off with a bonus playbook full of niche strategies for Schedule C owners. So stay tuned, grab your note, and let's get started. We kick off with the foundation deduction because no matter how great your income is, if you don't capture every legitimate write-up, your tax bill will sneak up on you. So section 1A, let's talk about categorize and clean the book. So think of this like housekeeping before the big audit tour. This week, open your books and reconcile. Scan every expense from January through now. Let's talk about an example. Our story, Kiana in Kapolei, a freelancer UX designer in Hawaii. She's filed $4,800 in missed subscription and software costs while she cleaned up her books. Implementation steps. 1. Export your expense list to your bookkeeping software. 2. Identify uncategorized or miscellaneous items. 3. Create business categories like software, web hosting, education, insurance, and so on. 4. Flag anything paid in 2025 that qualifies. Once your books are clean, it's time for the next set of deduction that's often overlooked. So we're still in section 1, but let's look at 1B. So commonly missed deductions. We're talking business insurance, continuing education, domain renewal, SAT tools, client news, which is 50% deductible in 2025, bank and merchant fees, cybersecurity tools, and professional coaching. Let's look at Marco in Seattle. A videographer forgot lens rental, Vimeo Pro, and copyright filing. So that cost him $31,000 in extra deductions. Here are your implementation steps so you don't be in his shoe. First, create a checklist of 10 to 15 common missed categories. 2. Review your 2025 cost list and mark any that match. 3. Pull receipts and invoices. Note business purposes. 4. Save them into a folder labeled like 2025 tax deduction reviewed. Next, let's talk about timing because when you pay matters just as much as what you pay. So we're still in section 1, but we're going to label it 1C. So timing, strategies, and place and service moves. For cash basic filer, the payment date controls. If you expect 2025 to be a strong accelerate expenses, if you expect 2026 to be stronger in revenue, you might defer some discretionary moves. Also, 2025 is powerful for equipment and tech because expansion rules. Let's look at Nora in San Diego. So online fitness coach. She ordered lighting and workstation in December 20th, delivered in December 27th, and placed in service in December 28th, and got full deduction for 2025. So if she wants to move those expenses to 2026, she will wait and play them in service in 2026 instead, so she can deduct it in 2026. Here are implementation steps for you. 1. Review upcoming business necessary purchases like computer, lighting, furniture, supplies. And then 2nd, order, deliver in 25 and due before year end if possible if you want to use it for 25. Document the place in service date. 3. For rent, software renewals, supplies. Decide if you want to prepay for 25 or defer to 26 based on income expectations. 4. Mark in your calendar. It must be paid used by December 31st, 25 for each item you accelerate, meaning you want to deduct in 25. Now, let's drill into two specific deductions that generate major savings, the home office and vehicle mileage. So, home office, we're going to call it section 1D. How to use it? It has to be regularly and exclusively use a portion of your home for business, and it must be your principal place of business or where you meet clients. So you want to measure it. Let's look at Ray in Honolulu. It's a data analyst consultant with a 120 square foot room dedicated to business. She chose the simplified method and locked in $600 deduction with minimal hassle. Let's look at implementation steps. So first, measure your dedicated space. Record square footage and total home area. 2. Decide to use either the actual method or simplified. So if you want to use the simplified method, it's $5 per square foot, but up to only 300 square foot. 3. Take photo of your workspace showing exclusive use. A lot of people miss this step because when you look at the IRS guideline, they talk about a lot about the item number 1 and item number 2, but they rarely, it's hard to find something like when you first search it, nothing like rise directly to the surface that tell you to take photo. But then how do you prove it to the IRS that you use this place to exclusively use, right? So you can show like a screenshot of your floor map for the house and the area that you stay in for exclusive use for your office. So that, but they don't know how it look like, right? So how you gonna invite them to your workspace? That means you need to take photo, and it's best if you can take 360 photo, so they will not have any question later. And take a quick video and make sure those are deleted if you can. Like, in the photo, when you take the photo, you can have it set the meta information of the photo so it captures the date and the location. So it's perfect proof that you save in like a drive somewhere, or save it on your phone or your computer drive or a cloud drive like Google Drive, and get it ready for when the IRS ask you to show proof, right? Because chances are they're not gonna come to your home office to take a look, right? And you don't want them to come to your office neither. So, and then 4, apply your percentage to rent or mortgage interest like utility, repair. So if you use the actual method, and save those documents. Next, let's talk about vehicle and mileage. So another underused area, especially when you are self-employed. So this is called in section 1E, so vehicle and mileage reduction. For 2025, the standard mileage rate is 0.7 dollar, which is 70 cents per mile. If you drive 10K business mile, so that $7,000 deduction, plus parking and tolls. Let's look at Owen and Denver. Here, drone pilot and log 11,200 business miles with an app. So that $7,840 deduction just for mileage. Implementation step for you. First, choose a reliable log like an app or spreadsheet and track date, destination, business purpose, and mileage. 2. At year end, sum total business miles, multiply at 0.7%. 3. Add parking and tolls receipt. 4. File away the log, receipt, and vehicle percentage worksheet if use actual expense method next year. Alright, so we are cover deductions. The next big section is retirement and HSA moves. So let's part 2. So great deduction matters that we cover, but sheltering your income through retirement plan and HSAs is where you cement the win. So let's go. It's going to be our section 2A. So we talk about solo 401k setup and strategy. So this is the heavyweight lifting for a Schedule C owner. It gives you both employee deferral and employer contribution room. Here are some numbers for you for 2025. So employee deferral can be up to 23,500. Catch up at 50 plus is 7,500. Especially catch up to age 60 to 63 is 11,250. Total deduction under Section 415C is $70,000 before catching up. There's a deadline. You must adopt the plan and make the written deferral election by December 31st, 2025 for the 2025 employee deferral to count. Employer contribution can be funded by your tax return due date, including extension. Let's look at Julie from Tacoma, who's a copywriter making $190K net. She adopted solo 401K on December 12th, set her $23,500 deferral, then in January when final was closed, make the employer contribution. Here's the implementation step for you if you want to do the strategies. So one, this week, select a solo 401K provider and complete adoption paperwork. 2. Sign the 2025 employee deferral election and save a copy. 3. Estimate your net profit and decide how much employer contribution you will make. 4. Schedule your employer funding for your business tax return due date, including extension. If you missed the solo 401 plan setup this year, there's a fallback, so keep watching. Let's move on to Section 2B, which is our private SEP IRA as a back pocket option. If you didn't adopt a solo 401k by December 31st, you can still open and fund a SEP IRA by your tax return due date, including extension, but no employee deferral, only employer contribution. Let's look at Anna in Hilo, who is a freelance photographer. She missed her solo plan adoption deadline last year, so this year she set it up early and switched from SEP to solo. We walked her through opening the SEP as a fallback just in case. Here are the implementation steps. 1. If solo isn't adopted by December 31st, select SEP IRA provider ASAP. 2. Calculate max employer contribution up to 25% of net employment earnings. 3. Document the funding plan and set aside cash before filing. While retirement is locking in, don't forget the HSA, especially if you have a high deductible health plan. Let's move on to Section 2C, which we talk about HSA, health saving accounts. If you qualify for high deductible health plan, the 2025 contribution limit are $4,300 for self-employed, $8,550 for family, plus $1,000 catch-up at age 55 plus. Contributions are deductible, grow tax-free, with withdrawal for medical expenses tax-free. Here's how to implement it. 1. Confirm your high deductible health plan status for 2025. Decide how much you will contribute this year. Set up automatic monthly transfer starting now. Give you more time in the market. 4. Create a digital medical expense folder to save receipts and track investments. One more pieces in the part. Don't forget the strategic alignment with QBI deduction. That brings us to Section 2D, which is qualified business income QBI deduction. Under 2025 law, the Section 199A QBI deductions remain permanently available for many Schedule C filers. Profit timing, deduction optimizations, and retirement contributions are all feed into the maximizing that 20% deduction. Let's look at Liam and Austin, who is a software consultant. He layered in his December equipment purchases, document his mileage, and funded solo 401k deferral. Because his net profit dropped into the sweet spot, his QBI deduction preserved in full. Here are the implementation steps. 1. Estimate your net profit after deduction and retirement contribution. 2. Track whether your income falls into or out of the threshold for QBI phase-out. 3. Coordinate business structure decisions like sole proprietor versus S corp with your advisor to optimize QBI. Great, we are halfway through. Now let's shift gears to managing estimated tax and cash flow so you don't get hit by the penalties. Let's move on to part 3, estimated tax and cash flow safety net. Now we tackle deduction and retirement. Now we build a safety net so you don't lose the gain to penalties or surprise tax bill. In this section, it's going to be a couple more subsections. First is section 3A, date and safe harbor rules. So your quarter 4 estimated tax payment for 2025 is due January 15, 2026. The safe harbor rules pay 100% of your 24 total tax or 110% of your 24 AGI exceed 150K to avoid underpayment and penalty. So that is only for federal. For state, you have to look up your state rule. Talk to your tax advisor. Here's a pro tip for you. If you file your 25 return and pay the full balance by March 2nd, 2026, you can often skip the January 15 payment entirely. Here's implementation step. 1. Pull out your 24 tax return and note the total tax line. 2. Choose either pay that same amount or 110% of estimated your 25 tax and pay that accordingly. 3. Mark January 15, 26 in your calendar for Q4 payment if you are using the quarterly method. So let's compute your 25 Q4 target and set up your cash flow system. Let's move on to section 3B, estimating your target payment trip. We will build a quick projection so you know what to set aside. Here are the steps. 1. You want to export your year-to-date profit and loss from January to now. 2. You want to annualize the estimated full year 25 net profit. So consider a slow December, a high December, or hold it flat. 3. Subtract expected deductions, home office mileage, equipment, retirement, HSAs, etc. And then 4. Compute federal tax and self-employment tax. Subtract taxes already paid. 5. The remainder is your estimated Q4 payment or the amount you should aim to have your tax fund by filing time. Let's look at Maya and Irvine. Ran this projection in early December and saw she needed to set aside $9,000 for the Q4 payment. So she set up automatic transfer so the cash was ready by January. Let's make sure your cash flow system works for you, not against you. And if you feel that this is too complex, you can visit our Pro Deduction SC shop. We have templates on how to estimate your quarterly tax payment. Either you are a business owner, a freelancer like a Schedule C, or just file your individual tax return, your 1040, or if you are a CPA and accountant, you can also use our templates. And if that is still too complex for you, you can reach us at smallbusinessaccountingfirm.com, and we are happy to have our staff ready to crunch the calculations for you. You don't have to do it, and you know that it's done by a pro. So let's move on to the section 3C. So it's still in part 3 and section 3C. So let's talk about tax savings account and payment discipline. This is where discipline meets execution. So you want to set aside is more than bookkeeping, it's a mindset. Here are some steps that you can do. First, you can open a separate saving account. You can label it 2025 tax or self-employed tax. 2, choose a percentage of every payment you receive, like 25 or 30%. It's a good range to start out with. 3, you want to automate transfer each time you invoice or receive money. 4, at year end, review this account. Does it cover your projected Q4 estimate plus anticipated April payment? If yes, you are good. If not, add extra in December. Let's look at Maya in Irvine that use 28% auto sweeps for each client payment. So when January comes, her Q4 payment were already funded and she didn't touch operating cash. We are almost done, but before we wrap, let's drop in the bonus playbook with niche strategy that many self-employed people missed. These are the nice to have. They are why not use them when you got weeks left in the year. Here's your bonus tip number 1. Contractor cleaning and 1099. If you pay any non-employee contractor $600 plus, you must file Form 1099 NEC by January 31st, 2026. But I think for 26, specifically, there's some holidays, so that date might change a little bit. Double check with IRS website to get your correct date for 26. But usually, every year, it's the last day of the month for January, adjusted by holiday. So some steps for you how to do that between now and then. So first, this week you wanna send W-9 to anyone you contracted. Next week, verify their name, social security number, and addresses. In early January, run the total, like file electronically and mail copies. Let's look at Derek and Phoenix is a handyman. Complete this in December and save hour in January.